Welcome back into Yellowhammer Radio on Superstation 101 WYDE. It's 34 minutes past the hour. She is Andrea Tice. I am Scott Chambers, and we are joined by a special guest on the air with us today as our local financial guru, Jeff Roberts, founder of Jeff Roberts and Associates. Jeff and his awesome team consist of 7 seasoned advisors who share 125 years. That's a lot. 125 years of financial planning with Ameriprise. Now, here's the cool thing. Barron's Magazine has placed them among the top 1,200 financial advising practices in the country. Not once, not twice, but 6 times. He's a local guy who's really doing big things. Now, his team specializes with working with affluent clients to preserve and grow their wealth. They are the go-to team in town for customized recommendations concerning estate planning, retirement planning, or asset management. Jeff Roberts, welcome into Yellowhammer Radio.
Thank you. Good to talk to you guys.
Man, glad to have you with us today here on this Thursday. I've got to ask this just first and foremost. Are you ready for Thanksgiving tomorrow?
I am indeed. I have my mother in the other room right now who came in town from Tennessee. She's actually listening to this radio show and waiting to go to the lake and cook some Thanksgiving dinner.
Gotcha. Well, that sounds like one heck of a Thanksgiving plan to me.
Oh, yeah, no doubt.
Good. Listen, we've been talking about everything going on in the world, and so I have a question for you right now. Can you tell us what happened in the stock market yesterday?
Yeah, it's kind of an interesting day for sure. Since the surprise outcome of the U.S. election 2 weeks ago where Trump secured the White House, the Dow Jones has rallied more than 667 points, which is about 3.6% just in that 2-week period of time. And although it took some time, the Dow Jones on Tuesday traded above 19,000 for the first time ever.
It was incredible. Well, what does that tell us, Jeff?
Well, it's kind of interesting. In a way, not a whole lot. And it's always good when markets go up. But the Dow by itself is not necessarily the end-all, be-all. Quite frankly, the Dow, and a lot of people don't realize this, it only comprises of 30 stocks. So it's not necessarily the best barometer compared to other ones like, say, the S&P 500, which is 500 largest companies in the market. In the Dow Jones, breaking 19,000 is wonderful. But if we really put it into perspective, it went from 18,000 on the Dow to 19,000 on the Dow, which is about a 5.5% jump. But it took over 483 trading days to do that. When it first broke through 18,000 on the Dow was the 23rd of December, 2014. And so it only jumped up 5.5% roughly in almost 2 years to finally get to 19,000. So although it's good to get there, it's about time.
Well, do we know what is really causing these equity markets to surge?
Good question, and speculation is always kind of at hand when we're talking about what drives markets.
Right.
But if we step back a little bit and we try and figure out what do we think is really doing it, there's probably a fair amount of an argument that could be said that with the election of Donald Trump, there's a tremendous amount of cheer going on with the idea of infrastructure spending that is likely because of his administration, what they've been talking about. They've been talking about renegotiating global trade deals, and they draw down on regulations in general. And so the rhetoric and themes coming out of the Trump administration could very easily be contributing to a rally in the markets.
Right.
There's a good chance due to the Trump administration that there could be some significant fiscal stimulus, including tax cuts, potentially tax reform, and as I mentioned, infrastructure spending, which could boost growth. And with the economy already close to full employment, it could help lift inflation back to a target. So those are some things that can be causing that. And if you then kind of peel away the onion even further from just the political side and you concentrate on just what's been happening in the overall economy, GDP, gross domestic product, real GDP, in the third quarter was announced to grow at about 2.9% in the third quarter. That's an annualized result. Now, that's the advanced estimate released by the Bureau of Economic Analysis. But 2.9 is a strong number and higher than it was substantially than previous quarter. And corporate earnings in the market are up here in the third quarter. So when you look at corporate earnings, which drive the market, you got GDP growth in the economy, plus the positive election results that indicate possible pro-business, pro-growth administration. Those all speak to possibly a nice rally in the market that we've seen.
Hey,
wow,
Jeff.
that's interesting.
Hey, Jeff, sorry to interrupt there, but this is Andrea, and I just wanted to ask you a question, kind of weigh in a little bit on this. Do you see any cause for problems in the momentum that we're seeing right now?
Yeah, it's a great question, because when you think about what we've seen, that in just a very short period of time, the markets jump up from 18,000, where it was literally just over a month ago, and it jumps up 5 percentage points, over 5 percentage points in a very short period of time, when it literally, first time it broke 18,000 was almost 2 years ago. You see that short-term volatility pretty quick. It can go in the opposite direction just as quick. So, for example, if hypothetically, and I'm literally giving a hypothetical, if Trump were to come out and say, you know what, I'm not going to try and unwind or undo Dodd-Frank, or he comes out or the GOP regulators push back and they don't want to deregulate. So we start seeing some fighting on the political side, and financial stocks, say, could drop or fall if certain political promises aren't delivered on. If Trump comes out and says, well, the Affordable Health Care Act may be fine the way it is and we're going to leave it alone, healthcare stocks could be impacted by that. So the things that have been driving some of the euphoric performance in the short term can turn on a dime if some political promises unwind and go in the wrong direction.
Wow. Well, you're really good at putting this stuff into perspective. So at the end of the day, what should we be thinking right now?
Thank you. And the point there is just this. Keep this as information, but it is not necessarily something that drives tremendous change in somebody's portfolio. And keep that perspective. Because the Dow and the S&P have just recently rallied and done well. In fact, all indexes, the Dow, S&P, NASDAQ, and Russell 2000 all reached an all-time high simultaneously, and that hasn't happened since December of 1999. But there are other sectors of the market that are not performing well. Just since the Trump election, the Dow's up 3.7, but municipal bonds are down 2.9 in that period of time. Emerging markets are down 4% during that period of time. The aggregate bond index is down 2% during that period of time, where financial stocks are up twice as much as the Dow. So you see this wild fluctuation in different areas of the market, whether it be bonds or stocks. And in this particular case, what makes the news the most is the Dow Jones. So keep in perspective that it's just business as usual. Some markets are moving forward, some are not. Interestingly, the bond market has kind of taken a bit of a tumble in this period of time, where the 10-year Treasury interest rate has jumped up almost 22% just since the election, which has caused bond prices to go down. And so if we take just the perspective real quick on the stock market year-to-date and the bond market year-to-date, from January 1 to yesterday, the S&P 500 largest stocks, is up about 7.75% for the year.
Wow.
The bond index is only up 0.5%. So let's say you're retired and you have, I'm making this scenario up, you have half your money in stocks and you have half your money in bonds, evidenced by those two indexes. Well, if half your money's up 7 and half your money is up 0.5, your average return on your portfolio is only 4.1 ballpark. But if you're seeing, hey, the market's up 7%, people think, well, I should be up 7. Well, not if you have an overall diversified portfolio. So keep in mind that markets move independently at times, and sometimes things are up, sometimes things are down, and you don't need to worry about the short-term volatility. And even though the Dow's making some good news, it could be down 1,000 points tomorrow.
Yeah.
Well, thank you, Jeff, for sharing and helping people get a perspective so they're not full of anxiety. They've got a better context for evaluating this. Do you have any closing thoughts before you head off to grab that turkey?
Well, thanks. Overall, it is always exciting to see markets moving in a positive direction, and we love seeing the Dow hitting 19 and look forward to hopefully days where it goes up to 20 and more. But yeah, when people generally have questions on these types of things, let us know. We'd love to help them at jeffrobertsonassociates.com. Give us a buzz, and we're happy to sit down and talk at any time with folks.
All right, Jeff, how do people get in touch with you, man?
Well, jeffrobertsonassociates.com or dial 313-9150. We'll schedule a time just to talk and find out how we can help. Guys, have a great Thanksgiving.
You
All
too.
right, you too. Jeff Roberts of Jeff Roberts and Associates. We're back right after this on Yellowhammer Radio.
This is Yellowhammer Radio.